Hello and welcome to another video by reitspro.com, a site where we'll give you insights on REITs and InvITs in India, a site dedicated to REIT and InvIT investing in India. You can connect with us through mail, WhatsApp, and Telegram when you visit our site. So today the topic is Embassy Q4 2024. The dividend has been received and we will analyze Embassy REIT and complete the analysis with very many facets today. Have got the credit already in your accounts if you are an Embassy holder. Now, just to clarify how it works, a lot of people have a confusion that since it pertains to financial year 2023-24, how is it going to work out in case of our returns? So let's clarify this first. So according to this chart, the May 24 amount is going to be shown in the next financial year because you get something that is a form which is called 64B. Last year, the form was something like this. So if you see the form here, May, July, November, and February were the dates that were mentioned, and that was the amount that was there for the previous year mentioned there. So the same thing would apply in this year also for filing your returns. Now, if you visit our website, you will get links to various distribution histories of REITs and InvITs. You can visit reitspro.com historical returns under the menu and see the various distributions of REITs and InvITs there. And one of the screenshots that I'm sharing here is for the Embassy REIT now here. As you can see, all these are listed on their website, the Embassy REIT website. The link has been given on reitspro.com for reaching this distribution history. And the Embassy REIT payouts, what is essential is that one needs to understand what is the post-tax returns, because that is a very vital component and changes our entire perspective. So if you see the distribution mix of the entire year, FY24, it was 21 rupees 33 paise per unit, out of which only 21% was taxed at the slab. And the dividend part is not taxed because of special tax provisions, as well as the repayment of debt is a tax deferred item. So essentially for this financial year, you look at the tax on the interest part that is given out, which is only about 4 rupees. So according to your slab, you will be taxed on that. Therefore, what happens is that if you look at today's price and 21.33 being the payout, you divide that by 345, you get a 6.18% yield. And for a 30% tax bracket, if you require an alternate form of debt, say for example an FD, you would actually have to put in money into an FD which generates more than 8% return to get something like this. However, that being said, these instruments are not purely debt instruments and they are hybrid in nature, as has been experienced by the unit holders themselves over a period of time. Appreciation. Now, what is the capital appreciation? We've just talked about the dividend part or the distribution part till now. So what about the capital appreciation? So the history of Embassy REIT has been such that it was sponsored by Blackstone, and the initial public offering was in 2019 at a price of 300 rupees. And the units were listed at NSE and BSE. Now, if you see, there has been a roller coaster ride, and is this how REITs perform? Is a question that normally people will ask. So at the time in February 2020, it reached a high of around 430, 447 here. So at that price, which is way above the IPO price of 300, which happened just about 8-9 months before this in March 2019. And thereafter, it has risen in between to around 400, dipped to around 300, even a little lesser than 300 after the taxation clarifications last year. And then it's gone up again. And now it's about 345. Now, this has been a bit of a change as far as we understand REITs, because obviously REITs are not so evolved as a product in India, and they are evolving. I would say they have reached a very good maturity level now, and people have started understanding REITs. Now, the NAV, however, does not seem to match up either. So if you see here, this is a chart of the NAV. So if you see the NAV, it's been quite a sequence. It's quite on a linear sequence. However, this is not the case when we saw the graph just previously. So now returns for an investor, if you see that we have a return of 9.76% XIRR. I'm sharing a screenshot here, which talks about the IPO at 300 and then a realization, assuming a realization at around 345, and the distributions being given out. This is a calculation here. And if you note here, this does not take into account the tax efficiency. Therefore, a comparative debt investment would actually need to generate a 12 to 13% per annum plus return to give you post-tax returns, which are equivalent to Embassy. If you ask me, I think it's a very good return that Embassy has given for an IPO investor. However, if you are not an IPO investor, then obviously you have been subject to these fluctuations over time, and your returns depend totally on this graph and when you entered and when you exit. So to understand what your returns could be, so you could calculate them yourselves. You need to take all cash flows, and you download these resources from our reitspro.com section on the free downloads section in the menu. So you can do that and calculate your own returns. Now, what is the regular tracking of prices like in REITs? So this is really not something that is suggested for investors according to us, because REITs offer diversification and stability to portfolio. They are meant for long-term capital investment, and they are meant to generate steady returns. So the purpose is different from, say, equity and debt. But that hedging you from debt, from inflation, is one more aspect than REITs do. Now let's look at Embassy other aspects that we need to consider. So if you see the fees, the cost you pay for hassle-free management in Embassy is something like this. So if you see, this is a snapshot from their earnings update, and there is a REIT management fees, and this is highlighted below. So this is the kind of fees that you pay: 3% of facility rentals. This is what you pay when you buy a REIT from whatever is given out as rental to you. And some major events in past, just to analyze Embassy in a better way, let's just see what are some of the major events that have happened in the past, because obviously these things repeat in future also. So there has been an exit of sponsor Blackstone. We made a separate video on that. And there has been also acquisition of new assets, increasing the asset base. So if you see, the exit of Blackstone happened something in the end of 2023, and the foreign sponsors were out, and the sponsor stake was reduced to 8%. So 92% became the market float, which is great, and for the entry of FIIs and DIs. So that sponsor stake was actually taken up by others in the market, including FIIs and DIs. Now, the major acquisitions have been Embassy Tech Village, Business Hub, and Tech Zone over a period of time. The first one happened in 2020 itself, and the Tech Zone happened very recently in April 2024. So over a period of time, there have been major acquisitions, and for that, they have raised both debt and equity, and the revenues therefore have grown because the asset base has grown and it has been funded by debt and equity. Now, the question naturally is, to many investors, does it dilute the value of my unit holdings? No, if done properly, it does not happen. So we'll come to that a little later also. So what do you need to see in future are 4 major points when it comes to REIT, especially an Embassy REIT here we are talking about. So the first one is the assets growth. What do you see? How do you see assets growing in the future? Secondly, how do you see distributions growing? Would the payouts increase over a period of time? Thirdly, what are the debt levels currently? Do you need to fear them, or do you need to take it as a scope for future growth for acquiring more assets? And fourthly, what is the comparative analysis vis-a-vis other instruments that you have, comparative instruments that you have? So let's cover all these 4 points now here. So number one, growth in assets. We need to continuously assess as investors if the REIT is adding quality assets to the portfolio. Secondly, are there enough allied assets in generating revenues? For example, in case of Embassy REITs, there is a small quantum of hotel assets which are generating decent revenues. So these kind of spread out the risks over time, and the quality of the assets becomes very important over time. Secondly, what is the distribution growth expected? So one is that we'll assess this distribution growth with respect to three things. Now, one is obviously the asset, which you just talked about. Then the second one is DPU guidance, and third is renting strategy and environment. This is individual to a REIT as well as macro in nature. So let's just see these three factors in this. So the outlook which Embassy has said is that there's going to be a DPU of about 22.4 to 23.1 in the FY 2025. So if you look at the current year, it was 21.33. So yes, they are looking at an increase in DPU. So we are looking at some kind of a growth in the distributions. Secondly, accretive assets, we need to see how the accretive assets work out. And a very simple way to do it is divide the increased revenue over the units increased for new acquisitions. Does it leave anything for the older unit holders? That's what would happen when we assess accretive assets in the future. The third is renting. So the management relationship with tenants is important. And also currently REITs, especially Embassy REIT, is facing some challenges in denotification of SEZ, which is outlined in their conference call, which you can see, download on their website. And how do you see the interest rate environment panning in the future? If interest rates rise, it could mean a definite negative impact over at least over a short term as far as REITs are concerned. Now, if you see the scope, it can also be evident that over a period of time, this is a snapshot from again the history of distribution. So there has been time when the revenues have been quite decent in 2020. Now this is before the corona period. So over that time and before some acquisitions, this has happened. So this is probably an indication of how things can go. So if you look at total of this could lead to a revenue of about 24-25 rupees in the coming years, as it seems, if the assets are good and the management does a good job. Now, the third thing to understand is the scope and fear of debt. Now, if you see the 29% leverage with a 7.8% average debt cost does leave a headroom of 106 billion rupees. So that has to be assessed because the capping in REITs is 49% of the total asset value. So that's a good headroom. But at the same time, the interest rate environment, if the interest rates increase, which people don't think that they would do, if they increase, then this could instill a fear in the markets regarding the asset of REITs. And fourthly, if you're looking at Embassy REIT, obviously you will compare with other players also. There are three others where two are office REITs and one is retail. Two others being obviously the Brookfield and Mindspace REIT, which are into office space, and Nexus REIT and retail REIT. Also, InvITs are yielding higher returns today, and a lot of people consider yield InvITs as an alternative, though they can turn out to be a different asset altogether in the way it functions, though quite similar because it's clubbed under real estate. And then the last thing that you need to understand is that your taxation is unique to you. So given all these factors, you need to compare and evaluate the returns over time. Now, thank you so much, and thank you for watching the video.